To some, the great lauded Chinese recovery has been a big disappointment for many. Of course, you'll remember at the beginning of the year, we saw the Chinese authorities decide to exit lockdown. They were one of the last economies to do so. But many thought there would be a lot of pent-up demand that would come onto the markets. But as I said, the last 2 quarters really haven't gone the way that many thought they were. And opportunities in the metal sector, for example, has been a great disappointment, with copper well off the recent highs. That's just one example of the afterflow from what we've been seeing in the wake of that, the developments this year and what's happened with China. Well, we can take the subject further now with the Chief Executive of Kraneshares, Jonathan Krane, who joins us here now in the studio. John, welcome.
Yeah, thank you so much for having me.
It's a pleasure. I'm going to talk about one of the ETFs that you run in just a few moments' time, but I want to get your thoughts first of all on whether my description of what's happened with China and this disappointment is maybe perhaps over-egged, or do you agree with me that it has not performed as we thought it might?
No, I think it's performing. I mean, China, came out of COVID really, early this year. And President last October, which was really we think the low of the market, is when President Xi got his third term, and then immediately started signaling that COVID would zero COVID would finish, and markets would start opening up, people back to work, and that really started happening in January. So it's really just been 2 quarters of China coming back. During COVID, the savings rate doubled in China, so there's a lot, that whole pent-up demand story is happening over there. I just was in China about 3 weeks ago, my first trip in 3 years, and it's back. I mean, people are back to work. There's traffic. The restaurants are full. It just takes time, and I think the second half of this year, I think there's going to be very positive numbers, coming out of China.
Okay, I want to pick up on that point in just a moment. But also in the last couple of quarters, we've seen a move away for some of the big manufacturers, or some of the big companies that have manufactured in China, such as Apple, which I think is one of the biggest headline numbers we saw, moving some of their production to India. India is a big competitor now in this market, and I think China, I guess, knows that. Do you think China perhaps maybe feels that they were a little bit late in coming back after COVID, and that they haven't really treated these large companies the right way?
I think China advantages 1.4 billion consumers. Their middle class is now 800 million. Urbanization story keeps going. People are getting wealthier. And so the next 10 to 15 years of China is incredible growth, especially wealth creation potential. So Apple, I think 20 to 25% of their global revenues come from China. That keeps increasing. So I don't see Apple moving away from China at all. In fact, that's one of their key markets right now. So if anything, if you see them going to India, it's more of an expansion into India than going away from China.
What do you see as exciting then in the next 6 months? What's going to be leading this charge, or this development, this improvement in the position?
Yeah, I just think that that it's the opening up story continues, and you have the consumer is back in play in China. The opening up of China. I mean, even to call it international traveling into China is just starting. So we were over there, and I could see it wasn't as many direct flights from America into China. They're going to start adding that on. So it's a process. I mean, COVID was very serious over the last 3 years, and I think 2023 will be a year of coming back in China, better numbers second half, and then I think it sets up for a very strong 2024.
As you said, a lot of consumers in China. There's a lot of manufacturers we've been talked about. Global companies do seem to concentrate on China. What do you see as the big new things coming along? We've got artificial intelligence. We're all talking about that. How is China going to engage with that?
Yeah.
And how is China going to persuade the international community politically that it is the right country to engage with on this sort of thing, which has certain sensitivities?
Definitely. So I think one thing that during COVID that China accomplished a lot was in electric vehicles, and we'll get into AI, but in EV. Okay. So today, China is the largest auto market in the world. 25 million cars a year are sold. Mm-hmm. It's the largest electric vehicle market in the world. More than 50% of all global EVs are sold in China. Mm-hmm. That 25 million cars a year will be 100% EV, I think, in the next 10 to 15 years. So it's the most valuable auto and EV market in the world. And what China accomplished was the supply chain, the electric vehicle supply chain. They have the largest battery maker in the world with CATL, and the mature supply chain that supports this strong growth of the EV industry, and also China's exporting more cars this year than Japan. So it's one of the largest exporters of cars also. And I think that what they've accomplished is you have such a large market. So when you're building your EV platforms and you're scaling it to all these large numbers that you have to produce, you bring in high technology, but then the cost per unit can come down, and then you compete very well globally. So I think global companies, see this happening, and it's something that China's taken leadership in.
It's interesting, actually. Just listening, I think it was Alex Partners in the States was saying the other day that the Western countries are looking as though they could well end up losing the race on electric vehicles to China, which I certainly think is, as you say, going to be a big element. Let's return to AI, because I think this is a subject that a lot of people are talking about. We keep on hearing it within technology companies reporting earnings. It's AI that's steering their earnings, and their outlook is based on artificial intelligence. And they're just trying to find a way to engage with it in a way that governments accept it, people don't mind using it. And I think more importantly is finding this idea about the cross-border relationships that might start to develop. And as I said, going back to what I was saying about the sensitivities around political activities in China and so forth, setting that aside, but the AI thing does bring into a lot of questions about whether or not China should be able to engage at a high level for AI. What are your thoughts on China and its regulation and determination to engage with AI?
Definitely. Well, I think every country has strong AI initiatives. Like America does, and China does. I mean, I think that it's definitely it's known that AI is going to create competitive advantages. I think the world actually needs to have cooperation between countries and sort of maybe a rule book, or in terms of, or structure around what how the world wants to approach AI together. And so I think that should come into play, because there's going to be cooperation, overlap, and all that, but also it should be AI development should be within a certain framework.
John, let's pick up on one of the ETFs that you have on the IG platform, KWEB.
Yes.
One of the number of internet China-directed charts that we've got here on the screen. I've taken the liberty of drawing a vertical red line on the beginning of 2023, so we can get an idea as to what we were talking about, the fact that these first 2 quarters of this year, the first half, has really underperformed what had been expected. What's your thought in terms of the longer term picture for this market, which, as you can see, is not too far away from a recent bottom? I mean, you must be salivating at the opportunities here based on what you've said.
Yeah. So KWEB is a China internet fund. It's the entire, it basically is an ETF that is the e-commerce industry of China. The e-commerce industry of China is the largest e-commerce market in the world. It's a $2 trillion market. And just in comparison to the United States, that's a $1 trillion market. So it's basically 2x the United States, okay, in terms of e-commerce. So KWEB, our Kraneshares China Internet Fund, has 31 of the top leading companies in this space. And we were very early at this, and that's the Alibabas, the Tencents, the Badus, and Meituans. This market is, if you're interested in the 1.4 billion consumers in China and how they're buying goods and services, this is the fund that captures that long-term growth. Now, KWEB this year, actually the first few weeks, in fact, in October it reached a bottom. Okay, right as President Xi got his third term, and then all of a sudden it started climbing. I think it went up 50-60% into the first 3 weeks of January. And then and we saw that whole opening up story, all the pent up demand, like this was the story, and investors were definitely risk on China, and then geopolitics happened. Okay, and so we've seen this market has been held back by geopolitics and media, okay, as opposed to fundamentals. And I'll give you an example today. KWEB, those 31 names, those 31 leading Chinese internet companies, if you add up the market caps collectively, they're 100 billion less than Amazon. Okay, right. So you have the largest e-commerce market in the world. You have 31 companies that represent that market, have a lower market cap than Amazon on its own in a market that's half the size of China. That makes no sense. This is an oversold market with deep value, incredible entry point right now for investors.
Yeah, that puts it into some sort of context. Let's go back to the chart, because I'm going to ask you the next question here. It's very difficult finding out where this is going to go. But I mean, even if this was to double from where we were, that would only take us then back to levels not seen since, November 2021. And we're well off those highs that we had all the way back in, Feb 2021. What are your thoughts on where you go? Look, you're going to say you don't have the regulatory power to give a number, but obviously you have a feel for it.
Yeah, I mean, look, we see there's tremendous more upside than downside with KWEB in this whole market. We see that with China markets as a whole. You have the second largest equity market in the world, okay, that is opening up. That the A-share market, maybe 4 or 5% of that market is owned by foreign investors. So as MSCI keeps including China and grows that, these markets will open up and for more foreign investors. But also in China, the IPO markets, there's a big shift to companies using equity markets to raise capital, and so we see the growth of the A-share and the equity markets in China, and then you'll see technology companies continue to go public. They'll go public in the United States. Okay, China wants to participate in U.S. capital markets. I think the whole PCAOB issue I think will be settled down this year. Okay, where that goes away, and you'll start seeing a lot of the tech companies going public in the United States, but also back in China, maybe on the A-share or the Starboard.
But surely China's got to go some way down the route of trying to persuade people it is right to get back into these Chinese equities because of the problems it's had with the decision to withdraw from the Western markets with some of those companies that had been listed.
Yeah, they withdraw. That was more defensive, okay, because of talk about delistings and everything like that. So then a lot of these companies listed on New York and NASDAQ did dual listings. They didn't come off the market, the U.S. markets. They just did dual listings in Hong Kong. But U.S. is the preferred market for these Chinese companies. They always want to participate there. In fact, companies like Alibaba have huge successes. They've made U.S. Pension funds and investors lots of money. So I think U.S. investors want to see continued Chinese companies listed in the U.S. So I think that problem is going to be solved. I think that'll become a non-issue. You have the dynamic of U.S. and China, number one and number two. That tension is natural. That's what happens. I think what's important is that these two countries, which just continue to increase trade together. Trade between U.S. and China keeps going up. So obviously the business is going well. They want to keep working together, but they're also codependent on each other where they need diplomacy going forward, good communication. Competition is fine. That's natural. But China is emerging as a global power, okay, and America is a global power. And so, they have to coexist together.
You mentioned the word geopolitics coming into the back end of last year. There is an issue, isn't there, between China and the West? Or is that just what we're told by the media, that there is this barrier between the two? You've been to China. You've been talking to high-level people about investments in the country. How do you feel about it? Yeah.
So first of all, China has strong initiatives and growth initiatives. If they want those to be achieved, they need global investment to come into the country. And so their relationship with countries around the world is very important right now. And that's why you see a lot of countries' leaders are flying into China, okay, to make partnerships, to get investment from China into their own companies, to provide access into the China markets for global companies. So I think you're seeing a shift also where global countries around the world see the importance economically of being close to China. Okay, like that's going to be forever. You have 1.4 billion consumers. You have to have access to the market. Plus, China is also investing globally and willing to do a lot of infrastructure investing through Belt and Road and other things. So it's a country that if I was a global leader, I'd want to have a good relationship with.
John, we've got to leave it there, but thanks indeed for joining us. It's fascinating insight into China and your experiences certainly, and as through Kraneshares, the exposure with KWEB. It's a pleasure. Thanks indeed for joining us. Thank you. That's Jonathan Krane. He's the Chief Executive of Kraneshares, talking there about the opportunities to come in China.